So we had already started with components of budget in the last class. Let us just quickly revise. So budget is divided into two parts. What are those? Quick, I have told you to make that flow chart, right? If you all have made it, well and good. If not made it, then this is what is going to happen. We are going to forget. Budget is of two types. What are the types? Quickly. Very good. One is revenue budget and another one is capital budget. Revenue budget is again divided in different types. What are those? Two different types. Hmm? Hmm. It's revenue receipts and revenue expenditure. Capital budget again gets divided into two parts. What are those? Same, the parts how what revenue has. It's just that instead of revenue, we will lose the word capital. Yes, capital receipts and capital expenditure. What are the types of revenue receipts? Different types? Yes, very good. Tax, non-tax. For revenue expenditure, very good, perfect. Planned revenue expenditure, non-planned revenue expenditure. Capital receipts, perfect. Borrowing, disinvestment, and capital expenditure again. Planned capital expenditure and non-planned capital expenditure. Out of which in the last class we had already started with revenue receipts and capital receipts. We had divided budget into two forms basically. Budget receipt was divided into two forms. I said first we will start with the receipts part and then we will be looking towards the expenditure. So budget receipt was divided into two parts. That was revenue receipts, and capital receipts. Out of which we have completed everything related to revenue receipts. So can anybody tell me what do we mean by revenue receipt? A receipt to be called as a receipt, what two things it needs to satisfy? What two conditions it needs to satisfy? I had given you all one tip also, that how can you remember? Very good. For receipt part, we put RN, and for capital receipt, we put CE. RN means revenue receipts neither creates capital, neither creates assets or nor reduces the liability of the government. Whereas capital receipt means it will either create a liability or either it will reduce the asset. That was the thing, meaning. Then under revenue receipts, we also said that revenue receipts are recurring in nature, which takes place very frequently, and these are capital receipts are non-recurring in nature. They are not taken place usually very easily. Then we had said tax revenue. We have talked about tax revenue. We had talked about non-tax revenue. While talking about tax revenue, we said that it is the main source of income for the government. And taxes are something which is the compulsory payment which everybody has to do, be it be an individual, be it be the government. Now we also studied about the two aspects of taxes. One was it is a compulsory payment, and second one was it does not provide benefits to the individuals. As I said that when we pay taxes, we don't say to government that you are supposed to give benefit to me as an individual. Whatever government does, it is going to be for the entire country, for the entire economy. Then we said that tax sources or tax revenues are something which are recurring in nature, which are regular in nature. So we already know revenue receipts are the type of receipts which are recurring in nature. Then taxes were of two types. I had said that taxes are of two types. Do you all remember what are the two different types of taxes? Can anybody tell me what are the two different types of taxes? Quickly, quickly. Yes, very good. Direct tax and indirect tax. Now tell me, direct tax is imposed on direct taxes are imposed on, yes, corporate tax is the part of direct tax. So direct taxes are imposed on income and property. Indirect tax is imposed on goods and services. So that is why we also call it as GST, goods and services tax. Then we had said that direct tax, we have studied about the two important terms. Remember, impact and incidence. So tell me, what do we mean by the term impact? Yes, quickly. Impact means very important, students, very important. You should all have made notes in the last class when I was teaching in detail. This is all the summary. It could have helped you all in doing the summarization. Impact means the person who is liable to pay tax is called as impact. And incidence means what? Incidence means the actual burden on someone who is going to pay the tax. So now quickly tell me, in direct tax, can we shift the burden? Yes or no? Under direct tax, can you shift the burden of paying tax from one person to another? If I am incurring, no. Very good. And under indirect tax, can we shift the burden of tax payment? Of course, yes. So under indirect tax, I gave you the example of Zomato, that how you order from Zomato, the seller is going to impose indirect tax or GST on you only, and on behalf of the seller, you all pay the taxes. So that means the burden of taxes has been shifted. But under direct taxes, if I am incurring income, if I am having an income, I only will have to pay the direct tax. My family, my friends, my relatives cannot pay taxes for me. So that was about direct tax and indirect tax. So under direct tax, the impact and incidence are the same person, but under indirect tax, impact and incidence are the two different people. Then we said that tax has the nature of progressive and regressive. What do we mean by the terms progressive and regressive? Yes, can anybody tell me what do we mean by the term progressive and regressive? Direct tax, okay, direct taxes can be of progressive nature, it can be of regressive nature. So what do we mean by the term progressive and regressive? Quickly. No? Progressive means direct tax increases with increase in income. As in when your income increases, direct tax will also increase. So that is why direct tax is of progressive nature. Regressive means at times there are some kind of taxes which are equal or which are same for each and everyone, be it be a poor person, be it be a rich person. It is going to be the same for each and every one. So that is why we say direct tax can be of progressive nature, it can be of regressive nature. Fine. Then under direct tax that was there. Under non-tax revenue, anybody remembers what were the points under non-tax revenue? Kinds of non-tax revenue. Nobody remembers. Yes, Sadhna, very good. Interest and there are so many points. Yes, fees, penalties, fines, escheats. There were so 7 points total, 7 or 8 points. Profit, yes. Okay. Dividends. So, gift, yes. The rest, all of you has forgotten. Don't remember. Forfeiture, very good. What about others? Okay, fine. Yes, license fees, etc. Very good. Penalties also. So till here we have already seen this was the part of your revenue receipts. Now we are going to start with capital receipts. For capital receipts, I had given you the short form CE. CE means capital receipts are those kind of receipts which are either going to create liability for the government or as it is going to cause a reduction in the assets of the government. That means either it will increase the liability of the government, either it will decrease the assets of the government. Those kind of receipts are basically called as capital receipts. If you understand the condition properly, you can easily identify the statement that whether the receipt, that whether it is a revenue receipt or whether it is a capital receipt. So understand the statement properly, understand the logic properly, that what happens under revenue receipts and what happens under capital receipts. So capital receipts refers to those receipts which either create a liability or causes a reduction in the assets of the government. So that means either it will increase or create a liability for the government, or else it will decrease the assets of the government. They are non-recurring and non-routine in nature. So while we were doing the while I showed you the flowchart of revenue receipt and capital receipt, I said revenue receipts are the kind of recurring in nature, whereas capital receipts are non-recurring in nature or non-routine in nature. Non-recurring or non-routine means it does not repeat in the economy very frequently. So a receipt is a capital receipt if it satisfies any of these two conditions. First condition, the receipt must create a liability for the government. Any receipt which creates liability for the government will be coming under capital receipt. So that is why we say na CE. That means either it will create liability for the government or either it will reduce the assets of the government. So first condition says that receipt to be called as a capital receipt, it must create a liability for the government. Example, borrowings are capital receipt as they lead to an increase in the liability of the government. So first example, they are saying borrowings. Borrowings means what? See, we know that at times even government has to take loan, has to borrow money from somebody else. It can be from the financial institution, it can be from the different country. So even government goes through that financial crunches and it has to borrow loan or take loan from the someone else. So these borrowings are a liability for the government because these borrowings needs to be repaid after some point of time. So even though money is coming, so you will say money is coming, so it's in the revenue, it's an income. No, that money is in the form of loan, in the form of borrowings, wherein you have to pay interest and repay the entire amount of money. So even though the money is coming, income is coming, it is going to be a liability for the government because in future, government will have to repay this money with interest amount. So tax received is not a capital receipt as it does not result in creation of any liability. So when we talked about revenue receipts, be it be tax receipt or be it be non-tax receipts, they are never going to create any kind of liability on the government. Because you only imagine when we give taxes to the government, do we say to government that in future you will have to repay me these taxes? No. That is not the borrowings. Government is not doing the borrowings. It is the major source of income for the government. That is not the form of borrowings. That is something which government deserves. So that is why we are giving. So that means if you remember, we said that under revenue receipts, there are no obligations. But under capital receipts, there are future obligations. Obligations means what? They have to repay the money in future. Under capital receipts, money needs to be repaid in the future, whereas under revenue receipts, there was no future obligation, nothing in future government had to give back. Another condition is receipt must cost a decrease in the asset. The receipt should decrease the value of assets. So in this case also it will be called as a capital receipt. Example, receipt from the sale of shares of public enterprise is a capital receipt as it leads to reduction in the assets of the government. Of course, when government sells its shares, it becomes a capital receipt. Although income is coming, but the asset, shares are the asset. Yes, we know that. So shares are going to be sold off by the government. So when government is selling the share, although it is receiving the income, but it is reducing its assets. Same way, say suppose there was one machinery which belonged to the government. This machinery is also an asset. Government is selling this machinery for say suppose 5,000 rupees. Although this 5,000 rupees is incoming in your within the government hand, but it is reducing the asset. What we had said, that if anything which reduces the asset of the government is going to come under capital receipt. So this selling of shares or selling of machinery will be the part of capital receipt because it is reducing the assets of the government. Now sources of capital receipts. So capital receipts, sources of capital receipts are classified into three groups or three types of capital receipts can be there. First is borrowings. So as I there is a time, there is a period when even government has to borrow money from financial institutions. So when government does borrowing, it increases the liability of the government. And this is where it is satisfying the first condition of capital receipt. Fine. So when government is doing borrowings, it is creating liability on the heads of the government. So these borrowings will be the type of capital receipt. Borrowings are the funds raised by the government to meet excess expenditure. So of course, when will government do borrowings? Whenever government feels short of money, government does not have enough of money to do the expenditure, that would be the time or that would be the period wherein government is going to do the borrowings and raise the funds. So government can borrow funds from open market, OMO. Government, we know, we have already studied about T-bills, right? Treasury bills. These are the government owned securities which are issued by the RBI. So this issuance is actually of a government. So open market operations. Reserve Bank of India, that is RBI. Through RBI also government can do the borrowings. Foreign governments. So foreign governments, the Indian government can take loan from say suppose US government, China government. So this case, this is called as foreign governments. Okay, these are the foreign governments. So at times it is possible that India might take loan from foreign governments like USA, China, Russia, Japan, like that. So loans from USA, England, etc. International institutions. India can also take loan from international financial institutions. See, national institutions are different. National financial institutions are those financial institutions which are there within your country. But what are international institutions? Those institutions which are situated outside your country. So what are those? It could be like World Bank, it could be IMF, that is International Monetary Fund. Borrowings are capital receipt as they are going to create liability for the government. So these are the four sources through which government can do borrowings. First was open market operations. Fine. Second one was Reserve Bank of India. Third is foreign institutions or foreign government. And fourth is international institutions or foreign institutions. Fine. So in which format you should know. Okay, open market operations. Here they have not given in detail, but you should know because we have studied. Open market operations are nothing but T-bills or treasury bills which are issued by RBI on behalf of the government. Actually, those securities belong to the government. Reserve Bank of India. If I say foreign government, then it could be the borrowings done from any foreign country like USA, England, China, Japan, Russia. International institutions like World Bank, IMF. So any borrowings done by the government will be coming under the heading of capital receipt because it creates liability for the government. Second is recovery of loans. Now recovery of loans means what? Say suppose government has given loan to somebody else. Now that's an asset for the government because government is going to receive interest on a monthly basis. But what if the person is repaying the entire sum amount of loan at one go to the government? Then in this case, the recovery of loans will reduce the asset of the government. So it is creating a reduction in the assets. Say suppose, now I hope it's clear, but still let me elaborate the example. Say suppose I have taken loan from Gokul. Fine. Gokul has taken or Gokul has given loan to Sadhna. say suppose 10,000 rupees. And Sadhana is going to do the repayment of the Gokul. Now, when she does the repayment, she has to do it with the interest amount. We know that with principal amount, we also have to pay the interest amount. So, say suppose she is paying 2,000 rupees per month. But one day Sadhana says that, okay, fine, Gokul, I have enough of money now. At one go, I will clear all your loan amount or borrowings amount. Money, and here onwards, I will be not paying you any 2,000 some amount of rupees, because at one go, I am clearing all your debts, all your borrowings. So now what will happen? The money which was being received by Gokul every month, it was an asset for Gokul. But now this asset is going to get reduced because Sadhana has already done her the entire thing. So same way, when government gives loan to somebody else, it can be a union territory, it can be a state government, and it can be a financial institution, it can be RBI. So when it gives loan to somebody else, when it recovers that loan, recovery of that loan will decrease the asset of the government. Okay. So government grant various loans to state governments or union territories. Recovery of such loan is a capital receipt, as it is going to reduce the assets of the government. Other receipts, now other receipts include was, first is disinvestment. What do we mean by disinvestment? So it refers to the act of selling a part or a whole share of selected public sector undertakings held by the government. So when government does disinvestment, that means when government sells its enterprise, shares of its organization or shares of its enterprise to the private sector, it means disinvestment. And when they are doing this selling, it is again going to reduce the assets of it. So that is why this investment will also be the part of capital receipt. Capital receipt, as they reduce the assets of the government. So as I said, it is going to reduce the assets of the government. Government holds ownership in various PSUs in the form of equity shares. We know that, right? In the form of equity shares, government has their shares in lots of PSUs. When the government sells a part or whole of its share, it leads to transfer of ownership of PSUs to the private enterprise. Now, if Gokul is the government organization, I am a private sector. Gokul will sell all its shares to, he will share all his shares to me. When he sells his shares to me, it reduces the assets of the government. It is reducing the asset of the government owned company, and it is increasing the uh, leave it about the private sector. But here government sector, the assets of the government sector is getting reduced. So anything which reduces the assets of the government will be called as capital receipts. So disinvestments. Next is small savings. So small savings refer to funds raised from public in the form of post office deposits, national savings certificate, Kisan Vikas Patras, etc. These are also treated as capital receipts, as they lead to increase in the liability. Now, government can also raise its funds or its money from post office deposits, national savings certificate, Kisan Vikas Paras. So there are different schemes and policies through which government can raise money or raise a loan. So again, when government is doing, it is the kind of borrowings only. So again, when the government is doing borrowings through different schemes and means, it will again increase the liability of the government. So increase in liability of government is nothing but capital receipts. Now, how to classify receipts as revenue receipts or capital receipts? Very simple. We can easily understand which receipts are revenue receipts and which receipts are capital receipts. Remember the tip which I have given you, RN and CE. RN means revenue receipts are those receipts which neither creates any liability for the government, neither reduces the assets of the government. Whereas capital receipts are those receipts which will either create liability for the government or either increase the assets of decrease the assets of the government. So likewise you can remember. Fine. And this is how only you can identify the given statement also as a revenue receipt or as a capital receipt. A receipt is a capital receipt if either creates liability or reduces assets. So if it creates liability or if it reduces assets, it's a capital receipt. If you want, you can note down this shortcut also. If you feel that this is easier way to remember, then this can be also noted down. Uh, it capital receipts are those receipts wherein it will create the liability for the government or else it will reduce the assets of the government. Receipt is a revenue receipt if it neither creates liability nor create assets for the government. So this is your revenue receipts. Revenue receipts cancel no liability, no assets. Capital receipts increase in liability, decrease in assets. So now categorize as revenue receipts or capital receipts. Loan taken from the World Bank. Is it a revenue receipts or is it a capital receipt? Is it a revenue receipt or is it a capital receipt? Okay. Gokul says it's a capital receipt. What about others? Yes. Dhanushri, Mridula, everybody replied. Loan taken from the World Bank. Yes. Very good. What is loan? Loan is the borrowings or is the money taken by the government. So loan is the type of borrowings. And recently we saw that any time if government borrows, that means it creates liability. Any receipt which creates liability for the government is called as capital receipt. So it is a capital receipt as it creates liability for the government. Next, you all just look at the answer. So let me. Income tax received by the government. Is it a revenue receipt or is it a capital receipt? Just give me your answers quickly. Done. Everybody has answered. Okay. So income tax is the type of, already we have said, it's the type of tax. Taxes, if you remember directly, you can give the answer directly that it's a revenue receipt because we know taxes are the form of revenue receipts and income tax is the form of revenue receipts. So it is a revenue receipt because tax is something which will neither create liability nor it will reduce the assets of the government. So that is why they will be called as a revenue receipt. Gokul, how come it is a capital receipt? Just now I said, simply remember this thing, no, why you all are getting confused. Revenue receipts, capital receipts. Revenue receipts RN, which means neither create liability, neither create assets. Capital receipts is for CE. That means it will increase the liability or else it will decrease the assets of the government. Very simple. Remember like this, note down all of you, this, note down this thing. And then whenever I ask, you all should know this. Very important or else you are going to get yourselves in very big confusion. And that too unnecessarily. Done. Wait, I will give 2 or 3 more. Then we will look towards the next lecture. Grants received from World Bank. Tell me, is it a revenue receipts or it is a capital receipt? Grant received from World Bank. Is it a revenue receipt? Is it a capital receipt? Definitely it's a revenue receipt because it's a gift and we have already studied that gifts is the part of non-tax revenue because these grants are not neither going to create any liability for the government. Grant or gift, when government is gifting, when foreign government is gifting something to Indian government, it will not say that in future you have to repay me this gift or you have to repay this money to me. No, it will not say that, right? Because it's a gift. So it will neither create any liability, neither create and decrease any asset for the government, and hence it is going to be a revenue receipts. Correct answer. Next. Sale of public sector undertaking. Tell me. Now, is it a revenue receipt or is it a capital receipt? Very good. The correct answer is capital receipt because sale of public sector undertaking, just now we saw that it is going to be the part of capital receipt because it is going to reduce the asset of the government. When government sells its shares to private sector, that means it is nothing but the form of disinvestment, and recently we discussed that it is going to be the reduction in the assets of the government. So it is going to be a capital receipt. Very good. Next, dividend on investments made by government. Tell me. Now, is it a revenue receipt or is it a capital receipt? Yes, everyone. Very good. It's a revenue receipt because we know dividend is the part of non-tax revenue, which means it dividend does not create any liability, neither reduces the assets of the government. So of course it is that. Next, recovery of loans. Recovery of loans by the government. Now tell me, is it a revenue receipt or is it a capital receipt? Sadhna, recovery of loans done by Dhanushri, recovery of loans by government. Government is recovering its loan from the people to whom they have given the loan. Just now we said that it's a capital receipt because recovery of loan is going to reduce the assets of the government. Any receipt which reduces the assets of the government is called as capital receipt. So recovery of loan is going to be capital receipt. Read the things properly. Interest received by government. Now what is capital revenue? Huh? New term. Interest was the part of non-tax revenue. Non-tax revenue is clear-cut the part of revenue receipts. Because when government receive interest, it neither creates liability, neither reduces the assets of the government. Very simple. If you all remember the points, simpler to answer. S sheets, you know, S sheets is the part of non-tax revenue. Anything which is allowed will directly go to revenue receipt. So now there are two techniques basically. First technique, you can identify it by remembering the points. Which point comes under revenue receipt, which point comes under the capital receipts. And another technique is you can remember the both conditions. If we know under revenue receipt the two conditions are it is neither going to create any asset, neither it is going to create any liability for the government. And for capital receipt, we know it will either increase the liability or either it will decrease the assets of the government. So whichever part you all feel that it's easier, you all can remember it in that way. Next question. Profit received by PSU. Tell me quickly, is it a revenue receipt or is it a capital receipt? Profit received by PSU. Done? All of you? profit is the part of what? Profit is going to be the part of non-tax revenue. Remember, dividends, profit are the part of non-tax revenue for the government. Non-tax revenue means directly revenue receipt. Or profit is something which is neither going to create any liability for the government, neither it is going to decrease the assets of the government. So if both these things are satisfied, automatically it is going to be a revenue receipt. Last, fees of government college. Fees received by government from government college. Yes, revenue receipt. Fees is neither going to create any liability on the government, neither it is going to increase the assets of the government. And fees is the part of non-tax revenue. So in both the cases, these are the part of revenue receipt. So fees of government college is going to be the kind of revenue receipt. Fine. Okay. So this kind of question marks MCQ, or at times they put it on assertion reasoning basis also. So you should know. Fine. Sure. For this session, this much only. Now we have to join the another session.